guys, and welcome to Midweek with Indiacharts. I'm Muskan Kapoor, your host, and we're joined here with Jay. After Nifty posting 9 consecutive positive close, we finally saw it react differently. So we have a lot to discuss. We will start from the US markets currently. So there are a lot of US data points that I'm currently witnessing. What does that tell us? And how will the Fed possibly react in the Fed meet, which is coming in the first week of May?
Right. So, firstly, I mean, there are some mixed data which we are getting because if you see the inflation rate,
Hmm.
the CPI data basically, that is cooling off. That has come down to almost 5% now.
Right.
At peak it was somewhere around 9.1%. So over there we are seeing a trend of cooling off. But if we see the core inflation, okay, which is a more of a sticky kind of inflation. So that is not cooling off. And in the past 3 or 4 months, it has been hovering around 5.6. So that is a little concerning because, despite the high rates which have kicked in the system, and now I think, there has been some effect as well due to this rising rate. So despite of that, uh, I mean, the core inflation is not cooling off significantly yet. In fact, month on month, it had inched higher from 5.5 to 5.6. Okay, so but overall, if you see, the trend is that it is between 5.7 to 5.5. Okay, it is hovering between that. So the thing is that it is kind of now stagnant over there. We need to see it cooling off further to give some comfort to Fed.
Hmm.
Then, if we
Correct.
see the non-farm payroll data, that is still strong, which suggests that the job openings and all are still strong. But when we see I mean, when we go ahead and we look at the data, the internals of the non-farm payroll, then over there you can see a cooling off trend in the private sector. Okay, which means the job openings at the private sector is cooling off. So that might probably give some comfort to Fed. But again, the job openings, which is around that to 39,000 mark, that is still high and not something that, Fed would like to see, because that will again, put pressure on inflation. So that is the thing. Then, yes, so I mean, more or less, if you see that there is mixed data, because CPI data is indicating cool off, and that is because of the falling, energy prices and all. But if you see the other part, it is not so favorable. I mean, it is showing a cooling off trend, but not so favorable. So the expectation is that there will be a 25 bips hike in the coming Fed meet, and then there is a possibility of one more rate hike. Now, I'm not too sure if there will be one more rate hike or no, but I think 25 bips is on the cards
Hmm.
for this coming meet.
Correct.
And then after that, I think as market watches out for, so the language of Fed will be important, and that will give us some cue as to how they are thinking and how their approach will be.
Correct. Makes sense. We're looking forward to how May will actually place the market coming forward and how Fed will react. Talking about that, we have also seen the precious metals. Have they seen some correction? So have we changed a little bit of our outlook? What is happening with the precious metals?
No, so from the long term perspective, absolutely there is no change. So I'll just share my screen. So
Hmm.
if we see the chart of gold, actually what was happening was that the gold was rallying, okay, without seeing much of a correction. So wait, let me. Yeah. So the gold was witnessing a rally, without seeing major correction. And you can see over here, despite this being in sell, the RMI indicator, it was continuing to inch higher, which was giving some negative divergence. Now that is getting corrected. Okay. And moreover, we are coming back towards a good support area, which is around $1950. So this, I'm speaking about the spot levels. So this is where I think there can be some support for the gold. And eventually, the expectation would be that it will take support somewhere around this zone, and it will start inching higher.
Hmm.
Okay. And if we even see silver, actually silver was lot more stronger than gold. Okay, due to which that silver has not actually closed below the 20-hour average yet. Okay, in fact, sorry, the 20-day average yet. So over there as well, if we see the break of the 20-day average, then there is a good chance that the correction can extend towards the this 40-day exponential average. But that said, I think I have no doubt in my mind that the medium to long-term trend is actually now turning bullish. So what we are seeing is that there was a non-stop rally from 20 odd levels to 26. That is nearly 30% rise, without any major correction. So we are just seeing a pullback of that. And also, if you see the weekly and the monthly chart, okay, so there was a good breakout which we had witnessed, and now the silver index is kind of pulling back and retesting that. Okay, so a pullback up to this trend line is possible, which is I think somewhere around this 23.45 mark, which is $1 more. So that is possible, but I don't think that there will be a correction beyond that. And in fact, if you see, the monthly cycle has turned bullish. Okay, so this means that this could be a start of a big move in the weeks and months to come. So that is how I'm seeing the precious metal at this point of time. And also, why we are seeing some bit of correction is because dollar index. So dollar index, like we had mentioned earlier as well, that we don't see, it has topped out from a medium to long term perspective, I think. Now the only question is that, can we see a pullback in the near term? And when we dig down deeper and we see the daily chart, okay, all this while it was not trying to go, it was trying to go above the 20-day average, but it was not able to close above it. Okay, so now there is a chance that it might close above it, and that is where we can see a pullback up to the 40-day exponential or the daily upper band. But I think that is it. You can see a pullback over here, and then we might end up seeing a correction. And if that happens, then again that will be positive for gold, and that could be positive for the equity market as well. So basically the dollar index can be kind of an headwind, especially in the near term. But I think the correction is imminent in that, and mostly it should not surpass this level, which is right now the upper band is around 102.60. Okay, so if that happens, then again it should eventually be positive for equity and gold. And that is where there is some conviction in gold and silver that this is just a minor degree correction, and once that is complete, I think we should see the next leg of up.
Correct. Makes sense. Talking about all the positivity going around in the market, the Nifty's IT index is very ironical at this stage. We are seeing it underperform, as also the quarterly results had come in. They've not been up to the expectations of the market. What is likely to happen in the future? Is it going to correct further? Also, while talking about this, if you could update us about the Nifty Mid Cap and Small Cap index as well.
Sure. So yes, so when the TCS result had come out, so it was not so great. I mean, it was almost in line, or it had missed the expectation marginally. But Infi's result was a shocker, because it had missed the mark by a big margin. I mean, there was an expectation of constant currency growth, but in fact it showed a degrowth, and that is where it shocked the market. And right now, I mean, things are so fragile. That is because of the Silicon Valley Bank collapse which we saw. So that is where we are seeing some sort of slowdown in IT. But if I look at the overall structure of Nifty IT index, frankly, I'm not too bearish. But I mean, when I see firstly the monthly chart, okay, so over here I can see that it is coming almost towards the 40-month average. Okay, now that I think should act as a very good support. And also, if you see in terms of price action, there is a good support around this band. Okay, So maybe I think we are nearing to the end of correction in Nifty IT. So there is a good chance, if we go down deeper, okay, then there is a chance that it can consolidate over here. I mean, around these levels, okay, before it actually bottoms out. But yes, I think the major pain in Nifty IT seems to be over. But when we look at the the extension level, that is A equal to C. I'll also show what the broader wave count is. But when I do A equal to C, so it comes to somewhere around 25,460 or something, okay, which is, I think, almost 1,000 point away from the current level. So that is somewhere around 4% downside that could still be pending in Nifty IT index. And in terms of broader wave count, what I am looking at is that this is wave W. Okay, this is wave W, this is wave X, this was wave Y. This entire rise was ABCDEX, and now this is ABC in Z that is forming. Okay, so this is actually the final leg, I think, and that is where you're now seeing a pessimism amongst the market participants that US is getting into recession, IT will get screwed and all. So these are actually perfect condition for the Nifty IT index to bottom out. Okay, so in terms of price action, so there are just, there is somewhere around 3 to 4% correction that is still pending, but I would say that it is very much nearing the bottom. Now in terms of confirmation, we will look out for a positive weekly close. Once we see a positive weekly close, that will be the initial point to think that probably the correction is done. But until we don't see that, there is a scope of a correction or a consolidation to continue in the Nifty IT index. Now, moving on to the Nifty index. If you see Nifty index, it has seen a stellar run in the past few days. So, there were consecutive 9 or 10 up days. And after that, we have seen some sort of consolidation. So this consolidation, I think, can continue in the near term, because, if this high is not broken, then we can actually see a retracement. Wait, let me remove the... Yeah. So if this low is broken, okay, actually, what has happened is that this was the day when Infi posted the result, and it was quite bearish. So Infi itself was down by 10% or so, and that had an impact on the market, and it formed a big bearish engulfing pattern. Okay, so if this low is broken, then in the near term we can see a retracement of this entire rise, okay, which works out to 17,500 to 17,390. That is possible if the Nifty index breaks the 2-day prior low, which is at 17,574. Okay, that is possible. And if that is not broken, okay, then there is a good chance that the Nifty can consolidate within this broader range. But that said, I expect some consolidation in the near term. But if you see the Nifty Small Cap index specifically, I think it is 11th or 12th day of up move, and that too, without a negative close. So today we have seen a negative close, but if we count from the lowest point, then it is 11 days of consecutive green close. So over here as well, eventually it will cool off. So it might, see some correction, something like this, wherein it eventually tests the 40-day exponential or the 20-day average. And, later on, once it sees a pullback, and then, the momentum cycle also completes its pullback cycle, then we can expect the up move to continue. So that is what I'm expecting on the small cap index. But if you see the broader picture, okay, if you see, then this entire consolidation is possibly coming to an end, okay, wherein maybe the 61.8% retracement level, which was done over here, that could be the bottom, and we can then see a pullback, and we can see the up move to continue. So the setup from the medium to long term perspective is interesting, and similar is the setup for the Nifty Mid Cap Index. So even over here, if you see, there was a breakdown over here, which actually made people very bearish. And then in the subsequent day, there was a sharp up move, and this has led to a bear trap. Okay, this is something which we had discussed in our previous interaction as well. And also, if you see, at that point of time, we had highlighted that the FIs are short at a very extreme level, which was not seen in the past. Okay, so now that trade has actually played out, because the FI shorts, which were somewhere around 1,96,000, now that has come down to, I think, 30,000 or 35,000. Okay, so now those data have more or less turned neutral, and now the focus will be back on how the market reacts. Okay, so over here as well, I think that maybe this up move is done. Okay, at some point of time we'll see a cool off. So while the Nifty Index, the Nifty Mid Cap Index pulls back, you can see a pullback up to this level, which is somewhere around 30,000. I think this level is somewhere around 30,800. Okay, and if this trend line is breached on the downside, then I think the 40-day exponential average, which will keep moving higher, because these are dynamic levels, that will come as a support. And later on, somewhere around this zone, that is where we can expect the Nifty Mid Cap Index to end its correction, and then we can see the next leg of up move. So that is what the expectation is right now, and we need to see how things unfold. But overall, broadly, if we say, it seems like we are trying to come out of the woods, and the negativity which was there in the market just 2-3 weeks back, I think that is reversing, and that is setting up us very well from the medium to long term perspective. So from a medium to long term perspective, the outlook looks very good. In the near term, there could be scope of a correction, and probably that correction will end up seeing a good buying momentum at the lower levels.
Correct, makes sense. We will have to look at how long this correction lasts, and then probably re-enter, and enjoy the up move, if that is something I can mention. But yeah, overall, it does look nice. And I'm looking forward to meeting next week and seeing where this thing has led. So thank you so much.